Good morning, everyone. This is Matthew Cruz. I'm going to be sharing with you the October 2022 supply demand report that came out this 11 a.m. from the USDA. Futures trading does involve risk. I'll let you read through that quickly. We always got to have our disclaimers ready when we do these presentations. So taking a look here at corn, production was pretty close to what the average trade was looking for. So they actually were dead on when it came into the yield. So we were looking at 171.9 reduction for corn yield, down from 172.5 last month. And that's exactly what the trade was looking for. So we did a good job of kind of estimate what the USDA was going to come in at. Soybeans production came in a little bit lower than what the average trade was looking for. That's why you're seeing some positive numbers in the soybeans right now. You can see last month we were at this 4.378 billion bushel level, and most of that, of course, has to do with them trimming the yield. There was a little bit more reduction in the yield maybe than what the trade was looking for at this estimate of this 50.5. So we came in at 49.8 bushels per acre was what the USDA is looking for our U.S. soybean yield. At production, and ending stocks in corn, we're looking at this 1.17 billion bushels. The average trade was at 1.12, so not too far away, not too far off from that. It's down modestly from last month's 1.21 billion bushels. So kind of slowly inching closer to that billion bushel ending stocks that we've been talking about for a while, but not quite there yet. Soybeans, they're actually the trade was expecting there to be a modest increase in ending stocks, and they actually maintained it at 200, which is where we're at last month, and we'll talk a little bit why. I think there's some games going on at the USDA and how they came up with that. Looking at the wheat, came in at 576 million bushels, so pretty close to what the average trade was looking for, and down slightly from last month's 610 million bushels. Taking a quick look at the production in Brazil, Argentina, and Ukraine. So Brazil, the USDA is increased their expectations to 152 million metric tons. Corn is at 126 million metric tons, and so you can see last year we were at 112.8 million metric tons at this time in corn production. So they're looking for a lot bigger crop there in Brazil. They're starting planting now. They're not even halfway done. They're probably around 10% done. So it's still in the initial stages of their planning. They got a long growing season to go, so we'll keep you updated on that. Looking at production in soybeans and corn in Argentina, 51 million metric tons in Argentina for soybeans and 55 in corn. It's extremely dry right now in Argentina. One of the driest beginnings that they've ever had during planting, and so I think that is going to hurt their so far it's going to probably hurt more their corn planting period, because the longer the drought goes on, the more you're going to see that corn production shift to soybeans. And so it's probably more bearish news for the more bullish news for the corn, and a little bit more bearish news for the soybeans because of that. Looking at the Ukraine, you can see the production's estimate is at 31.5 million metric tons, and that's compared to 42. And so that's we don't see that number increasing, just because the war in the Ukraine looks like it's going to become a long much longer war than originally thought, and so it could last several years. It really isn't any side that's wanting to give in at this point. So the longer that goes on, I think it's going to be harder for Ukraine to get back to their pre-war production levels, right? Because they're having a hard time exporting, and it's getting harder for them to finance the new crop when they're having trouble selling their old crop. So global ending stocks came in at 301 million metric tons, pretty close to what the average trade was looking for. It's down from last month at 304.5. Soybeans at 100.5, pretty close to what the average trade was looking for. A modest boost from last month at 98.9. And then the wheat came in at 267, about dead on what the average trade was looking for, and a modest reduction from last month. You can see here the corn estimates for China's imports at 18 million metric tons from the U.S. and 98 for soybeans. So still pretty strong, especially in the corn. Remember, it wasn't that long ago China was not importing hardly any of our corn, very small amount, probably less than 5 metric tons, million metric tons, and now they're up to 18 and 22 last year. So looking at the corn revisions, so this is where you see that reduction in yield from that 172.5 to 171.9, 0.6 of a bushel. So that's how we reduce our production here. I bet that's 49 million bushels. You can see they actually increased imports by 25 million bushels. And so looking at the feed, they increased feeds consumption, which was good, at 50 million bushels. But it didn't come as a surprise that they did offset that by reducing ethanol by 50 million, and then they reduced exports by 125 million. So I think the writing's kind of been on the wall that there's a lot of pressure on exports, just with the high dollar. And China has kind of been slowing down a little bit lately as a buyer, but we still think they'll come back. And they actually announced this morning, I think, over 500,000 metric ton flash purchase in soybeans. And so we take those reductions, and overall it really dropped us by 47 million bushels down to this 1.17 billion bushel level in corn ending stocks. Looking at the soybeans, we see this 0.7 of a bushel reduction here that amounts to that 65 million bushels. Now this is where I think things get a little sketchy, as they increase then 34 million bushels over here. And so crushing's increased by 10 million bushels. Similar to the corn, they made a reduction in the soybean exports by 40 million bushels. So we see that here. So overall then, nothing changed in the ending stocks, which is obviously a little too convenient for me. The numbers worked out, with all the increase and decreases to come down to zero. So this is, I think, the USDA saying we really are not comfortable with showing that we have ending stocks falling below this 200 million bushel level. And so I think even though it came right at trade expectations today, the soybean prices is up quite a bit this morning. We'll see where it closes, but I think the trade is probably skeptical of that as well, saying, hey, look, obviously the ending stocks are a little bit less than this, but the USDA is trying to cover for that and kind of control the food inflation a little bit. Looking at the wheat, made reductions lower on planted area by 1.3 million acres. Harvested was down by 2 million acres, and then they shaved a bushel off of the yield. So that took production down by 133 million bushels. And now we have to adjust for demand. And so you can see here they reduced the feed usage by 30 million bushels, and then exports by 50 million bushels. And so then our ending stocks really only dropping by 34 million bushels. So this is still for wheat. The wheat ending stocks has been slowly trending lower as time goes on. And so that's where we're at in the wheat. Taking a quick look at what prices are doing for the moment. This is not the close, but just looking at these in corn. We're down 1.5 right now. We were down, like 12 cents at one point, but we've pushed back higher. So it's a good sign that a lot of buyers came in and propped up that price. Really there was a lot of the expectations were already in the market, with most people were looking for a reduction in the corn yield, and that's exactly what we found. And so I think if we can stay up here, it should provide pretty good support, and we can continue to slowly drift higher as we've been doing here in the last couple of months. Looking at the soybeans, the beans look like are going to have the best day so far, just because they cut the yield a little bit more than what average trade was looking for. We're up 22 and a quarter so far. This is not the close yet, though, so you can see here that we did sell off a little bit, but we'll see how that goes. But I kind of like how we bounced off of this bottom. I'm hopeful that this might be our harvest lows here at this, 1360, 1355 area. And this is November beans, and so hopefully I see us moving back higher here, back up to this 1480 area, but it might take us a while to get there. So looking at the wheats, wheat didn't have a positive response to today's news. I think they were expecting maybe a little bit bigger cut, but they're down 10.5 right now. But I pointed out in prior reports how we have been forming a nice rounding bottom here. You can see here we bottomed here in late August, and slowly all of these little pullbacks that we've had, these little minor corrections, have ultimately we've come back and made a new high. And so I look for that to happen again. We're at 890 now, but I'd like to see if we can continue to break above this 950 area. There is a lot of pretty heavy resistance at that level from back in July. And so, but yeah, I'd like to maintain this rounding bottom and keep that intact. So if you're trying to decide if you're a bull or a bear, of course the bulls are gonna point out that there's a lot of question regarding the grain corridor integrity and what's going on there. Obviously the market is still following what's going on in the Ukraine, even though the war is kind of lagging on and on. But you've probably heard that they bombed a major bridge linking the Ukraine to the Crimea Peninsula, and that, of course, the markets were very skittish and got a good bump from that. And so they're watching that closely, because it's any time though the bears will point out that Putin can pull out of that grain corridor and quit following that agreement. So, and of course the bulls point out that the yield reports are been drifting lower. Depending on where you're at in the Corn Belt, especially in the Western Corn Belt, they're a little bit at APH, or 10 or 15% below APH, and then in the Eastern Corn Belt you're maybe 10 or 15% above APH. And so crop conditions are still quite a bit worse than they were last year at this time. Of course, basis levels are still very impressive, especially we're pretty much in the middle of the harvest, and basis levels are possibly record highs for this period of time, during harvest. And so I think the biggest argument that the bears have is of course, the rising interest rates and the macroeconomic conditions of the economy, and pointing out that demand is going to be reduced here, and I think that can be the case. But we still think that while China, their consumption is maybe slowing down a little bit, it's not going to completely go away. They're still going to come in and buy. They can't afford to skimp on food, and they got to keep their huge population well fed, and so we don't see that going away anytime soon. But I want to thank you for joining us. If you have any questions, give one of our brokers a call at 712-227-1110. Thank you, and have a nice day.